Can you guys hear me now?
Yeah,
Yeah, we can hear you, Coach. A little
Okay.
light, but we can hear you.
Okay. Thank you. Because, I made a call on whatever Teams. You have to change your mics wherever you go, you know,
Yeah,
the
right. Yeah,
settings.
it's
It's
such a pain in the ass.
it's maddening. Good
Yeah.
morning.
Good morning.
And all right, let's go. Good morning, everybody. Hello, Warriors. How's everyone doing today? Hope everyone had a good weekend. How you doing, Mike and Ingmar? Kman, how are you, brother? And Steve and Blake's here and Laura. So, so far, kind of a quiet start once again in FX, that 97.5 level in Dixie, and uh, looks like we're still, heading sideways in Euro. So, let's take a look at what's going around because I know that Ryan's going to have some great answers. So, let's look at this.
that's a pretty high bar, Dale.
What?
Me having any great answers.
All right. So, first of all, the pound did make new lows. You would think there'd be a reaction here sooner or later, Ryan, don't you think? I mean, 4.5, almost 400 pips, 350 pips in a week and a half, almost back to these lows. I know it's a weak sister, but this area looks important. Uh, Euro's still sideways. To me, it still looks like a triangle. If it breaks from here, I rarely catch these tops because they just grind and grind and grind and roll over. It To me, with the dollar weakness we've had, I think we're going to make a run. Maybe break out of this triangle up here at 1740 or so and make a run at the highs. Not that I'm long euro or short dollars. I'm flat. So I know how everyone feels when they're flat. You want to be able to, make a decision and commit. So have you committed to anything here this morning, Ryan?
No, I haven't. I haven't committed to anything. We've come into another week where we've probably got to trade it completely different to how we traded last week, which was trading different to how we traded the week before.
Yeah.
We've got this Ukraine Russia Trump announcement coming up.
Oh,
Um,
sanctions. Yeah.
yeah, sanctions. Well, probably has been reported increased arms provisions to Ukraine. That's coming on top of what Europe's doing as well. So I think we've come over the trade tariff deadline. We've got another deadline. The market's going to forget about that for 2 weeks, and it's
Okay.
going to trade something else. And I think this geopolitics is going to be it. I want to know how pissed off Trump is at Putin, because he's been saying he'll get a peace agreed, and he keeps saying he's not happy with Putin. Well, is he going to go the opposite way now and say, well, if he's not playing ball, we're gonna come in even harder, and then that's going to get risk taking notice. And if
Yeah.
that's the case, we're probably going to see we call it geopolitical or geographical risk. So maybe a
Great
run to the
point.
dollar, exit out of Europe because
Yeah.
they're closest to it.
Right.
Um, so it's you got to trade this while keeping at the back of your mind what the fundamentals and everything else is going on. So yeah, I wouldn't be surprised if we get sort of bad headlines out of this, that we see euro, having a decent pullback uh,
Okay.
down to that 115 area, 114 and a half.
So where would you sell it if given an opportunity?
That 117.50
Yeah.
is looking pretty solid. Obviously, I'll judge the reason why we're going there in the first place. If it's good news, then we might be going higher. But yeah, if we get a little move on the data because we've got the CPI coming up, something like that, and risk is still looking bad, then yeah, 117.50 looks a decent area. You could even have a little nibble at 117, the figure that's holding at the moment, with a bit of a tight stop, if that's your
Yeah.
bag.
Okay. Something I have noticed, and I know that you guys were on it and trading it last week, but when I look at my screen, USD MEX is the only thing that's in the green. So when you have a red tape, you buy what's green. When you have a green tape, you sell what's red. So is confidence building for this being some type of low here and maybe get a rally up towards 1895? Or I know Blake had a level that if we got above would be a false breakdown. Maybe it's 118.80 or 119. I'm not sure, but it's showing resiliency on today.
Yeah. Well, it had that rally late last week, and
Yeah,
it looked like it was just breaking, the July series of lower highs that you can see
yeah,
there.
yeah.
But it can't maintain it. So I was waiting for 1855 to flip to long my shorts, and it came within like half a pip of it before bouncing. But this bounce doesn't, unless it's going above 1880s.
Yeah.
And even then, that's just a short-term move. It's still looking very, very weak, and I can't rule out a move back down to 1855. I've got a level at 57. If it holds that for a third time, that'll be potentially where I flip.
Okay.
But while it stays below, 1877, 1882, 83, it stays bearish, and we could still be heading lower.
One thing I could say for certain is, your last confirmed low was all the way back here at the end of
Yeah.
June. And this was a divergence, but not the kind I trade because, it's 20. And we get a break to new lows now. I'd be surprised if they could take it down under 30. So, stalking that with you guys too, if this sells off. Could they be affected by anything tariff-wise going forward now? Or is it
Well,
settled?
he threw that letter out, didn't he? The same as the EU, late on Friday, I think it was. Whatever it was, 30% tariffs, 35% tariffs, and
Okay.
the market pretty much ignored it because it doesn't care now. It's got everything's predicated on August the 1st, and that's 2.5 weeks away, 3 weeks away. So market's not bothered, and they've still got discussions happening, of course. So yeah, this is going to come down to other news, if you like, as what's going to drive it. I think you're right. I think if I see 1850, I mean, I'd love to see 1850,
Okay.
and I'm prepared to buy it down to 1845 just in case you get a little bit of a flush out.
Okay.
But if it holds there for any length of time, then yeah, you can probably go long and sit in it for quite a while.
Great analysis, bro.
Thank you, mate.
All right. So try and top that, my friend Kman. Your partner in crime on the
Morning.
Flow Show. Good
Yeah,
morning,
well,
buddy.
he just repeated what we said on the flow show.
He just repeated what you said during the Flow Show. Right?
Copyright.
Okay.
Yeah, just go and listen to the recording. Just go
All
and listen
right.
to the recording.
Yeah, go ahead. Yeah, everyone should listen to the recording.
Uh,
So you want to start off with yen, US dollar yen?
yeah, yen is still weak. You look at the crosses, it's still weak. For as long as there's no trade no trade deal, it looks like the yen is going to continue to just remain on a weak footing because it blocks everything in Japan. And now we are going also to head into those elections at the end of the week. So unless Akazawa can get hold of of Besant in Osaka, because he's going to take care of his air miles to go to the expo in Japan. But officially, they should not be talking about trade. That's what the US side said, but I doubt they will. I doubt he can go for a week to Japan and not talk about trade. So there's going to be your next move ahead of those elections, I guess. But yeah, I mean, dollar yen, the dollar side will depend on somewhere the inflation data in the US as well. But as I said, also, I mean, the best way to express maybe yen feelings are through crosses now, and let the dollar do its thing. But yeah, overall, Seems
Yeah,
like Japan is a bit trapped right now, and you can't buy yen for as long as they don't have a deal.
Okay, I want to ask about something that floated after the close Friday. It's open to all you guys. This news about that Powell had said he was going to resign.
No, Powell
Uh,
never said he was going to resign.
okay, that's right. Okay, so
Oh,
that was
that was
That
some
was
silly
somebody
article.
somebody who is actually part of those who want Powell to resign because of the refurbishing of
oh
the Fed
yes,
House, saying that Powell is thinking of resigning. Powell never said that he was thinking of resigning.
yeah. Okay, so
I think that's
it's
a big story that's been blown up like a little balloon.
that's their
But
hopes. But sometimes that's also a strategy to continue to pound the drum for him to do what they desire
yeah,
him to do.
oh yeah, oh they continue
I
to
don't
put
think it
pressure.
works on. I don't think it works on this guy.
No, 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 no. I
Yeah,
mean, but the thing is, as Ryan also said on the floor show, I mean, now tomorrow, there's not going to be a good outcome. If inflation is higher, it's going to be someone else's fault, and if inflation is lower, then Trump will be out again in force, and all those people saying that Powell should resign. No, yeah, well, he may be
what
forced at one stage if the pressure becomes too high, but then all those stories about the next Fed governor is going to cut rates by 300 BPs. Come on, let's
yeah,
be serious. No one in the Fed has ever done it.
yeah. Well, uh, our president wants us to have the same rates as Switzerland,
Yeah,
but that would make us like Zimbabwe if we
no,
did that.
I think if you look at African countries, they may have their interest rates a lot higher, but
Yeah.
yeah,
Well, I mean, what would happen to the dollar and everything else if something like that happened?
well, I mean, he thinks that it's going to then be the manna for US to spend, to build, to whatever. But before that happens, all the confidence in whatever US dollar related institution is probably going to go out of the window for a while first.
Okay, well, uh, the bonds need a good inflation report because last week's rally in both TLT and the 10-year, when it pulled back to support, making new highs in the 10-year. So, this still, I wouldn't short it. So, it looks like the path of resistance is still higher. Um, this has been, as long as we hold this pivot, who knows where we could go. You have a view on yields? I mean, the whole market is expecting lower yields, and
Well, you think so?
I think a
I
lot
don't
of the
know.
market
I don't
is.
know. I don't know if the whole market is expecting lower yields. Everybody is
Okay.
still scared about tariff-induced inflation now, especially if you slap higher and higher
Now,
tariffs on stuff. But then it could also be like kind of the balloon, that loses air all of a sudden because there's always about those tariffs. There's always you slap tariffs on let's say for instance you slap 30% tariffs on European cars, but if BMW or Volkswagen they reduce their prices by 15%, which could be because Japan is thinking of the Japanese car makers are lowering their prices apparently to fight those part of the tariffs, then it may not be that big of an inflation threat. It's all going to depend what the
yeah.
details are of all those trade deals and tariffs and stuff, and then we will have numbers to trade bonds on as well. Because it's going to be depending on inflation, and then the debt will come back to the fore.
Okay. Noke giving up a little ground. Not, and it was holding up the best last week. Blake, you still in this trade?
I am.
Okay.
It's still just an inverted head and shoulder pattern. It's got to get above 1020. And
Okay.
that was actually from the week ahead video. Hey, if it breaks above 1020, it's a breakout. So I mean, I'm
Okay.
just still waiting for that move to happen. Just kind of sitting there, Dale. Just kind
Yeah,
of, yeah.
yeah, and Canada a little weaker today. Uh, I'd buy it again if we pulled back down into the low 136s. Anyone doing anything with the loonie in here in this range?
I'm long. I'm long
Okay.
right here. And I've been
Me
long
too.
since last week. Yeah.
Yeah,
I
I jumped on his bandwagon as well.
okay.
Yeah.
I took it Friday, so that's why
Got
I
it. Yeah,
you
I
know
know. I don't think there's anything that disrupts what we're currently seeing. That the thing about all of these headlines this weekend, it's just moving the goalposts. That's all it is. It's like, we go from focusing on June 9th to now August 1st, and it's just more of the same. And
I
if you look around at the FX market, the FX market is very much unchanged. I mean, there
yeah.
are a couple of movers out there, but
The
you know,
metals. And I just want to remind people that Greg has said when we get this next rally in silver, it's a five. Okay, you never know how extended it could be, but I
sure.
when we talked last week, he was talking about 38 and a half, 39. But that when it comes out of a triangle, that would make it fifth wave, a terminal wave. So I'm not saying short it, but you don't go broke taking profits up here if this is wave five. Um, so S&Ps came in lower, um, sideways. It looks like the euro. Sideways action. Look at the S&Ps for the last few weeks, and you look at the euro. The last few weeks, maybe the euro has a little bit more of a down bias, but not much. It's sideways.
Yeah, I mean,
So
116.50 it remains really key. I mean, those are the breakout
yeah,
points from a couple weeks back. So,
yeah,
it's just drifting down those levels. This is kind of make it or break it here.
yeah.
But with Trump going after the EU and looking to set up 30% tariffs there, it'll be interesting to see if we can hold above that 116.50 or not.
Okay, well, I know that both Ryan and Kman trade dollar yuan. Are you impressed that this pullback is putting in a higher low so far? And could there be anything setting up there, even with trade deals not being settled, even though they say it's settled with China? Is there more upside to this bounce, or was this a great rally to sell, in your opinion? Start with K-Man.
Um, I don't see anything to do here, Dale. I mean, we're
Okay.
moving inside 0.5%,
Yeah.
which is to me is very, I don't know, it's just sidelined. And nothing seems to bother the Chinese yuan too much right now. Um, there too, I think nothing is done on the Chinese side, especially Xi remains himself very, very silent about any trade deals. He seems to be, you know what, I think in the end, Chinese yuan is going to weaken because he's playing a dangerous game with Russia. And the rest of the world may be a bit sleepy right now. He's trying to get the EU to make deals with China, but if really there's too much stress on the geopolitical side of things, it may not work
What, what,
in the end. But
what,
it's may just take a lot of time,
yeah, what is the dangerous game she is playing with Putin?
because he's siding with Russia. I mean, this
Well, okay.
it's as clear as
Yeah.
can be that it's part of the drones landing in Ukraine are Chinese.
Yeah,
Uh,
that's right. He was at a meeting and he talked to one of the officials said that
hmm.
China can't afford to let Russia lose the war because it keeps the U.S. attention on Europe instead of Southeast Asia, the
Yeah, but
seas there, and
at the same time, they're trying to play the game, trying to see if they can side with for at least up their trade with the EU, and maybe the EU is stupid enough to walk into it. But it's in the end, it's going to come down to, is it safe to trade with China? Because if we trade with China, it's as going siding with the BRICS countries. That's basically it. And I think if in the end Xi sides too much with that, which is to me still a very high risk right now, then I think from the investor side, nobody will want to put money in China, to
Yeah.
develop and stuff, and then the Chinese one will weaken again. But I think it's such a long spread out game. We can't really. I can't really trade anything in Chinese yuan. I mean, at one stage I was thinking like, oh, this thing is going to go below 7 because there is some G finally picked up the phone, and then it actually didn't go anywhere. Just like 0.5% move, which is nothing, right?
Yeah, is this very close to extreme low volatility readings across the whole board of FX, except maybe
Hmm.
the yen?
Yeah,
Uh,
yeah.
It's summer,
yeah,
by the way, guys,
Yeah,
just in case
yeah,
you forgot.
yeah.
But
Okay, well,
look at that April spike. Okay, that was
yeah,
the big spike that every currency saw at that point over the April
yeah,
Liberation Day tariffs and whatever, and every other currency saw spikes at the other deadlines. But the Chinese have kept this one under wrap. They saw that spike and went, "No, we're not having that. You're not doing that to us and our currency." And they've kept it. The PBOC have kept a very very tight leash on this since, and that's killing the vol because they got the power to do that.
wow. Okay, that's really an interesting insight that they have that much power. Not to just control vol in the yuan, but it's probably controlling vol and everything. Is that what you're
yeah.
saying?
They have $3 trillion to guide their markets. Huh?
Yeah, that's I used to have that in my dreams. Anyway, and I woke up and now I'm just a thousandaire. But anyway, why don't we go to what's happening with risk, and I'll bring in Blake, and Blake will update us. You
Yeah,
sound
sure. Well, first of all, George mentioned that you sound distant. I just want to
yeah,
make sure everybody reminds everybody that Dale's actually traveling. He's not in his home location right now. He's traveling for the remainder of the summer. So we're happy to have you here, Dale. And I know you're on a
yeah,
different, using a different,
yeah,
microphone and stuff. So that's the reason why. So if you're thinking that Dale sounds a little funny, he sounds different than normal. That is correct. Before I get into like risk and talk about CPI tomorrow, I just want to mention if you guys haven't signed up to hear about trading analytics and get most recent updates, because we're giving away 2 trader funding program assessments this month. Put in your name, email address. Yeah, I know people are going to end up putting multiple email addresses to try to win. Just fine. I mean, as long as you're on the mailing list, you're going to be in the giveaway raffle, if you will. So make sure you guys sign up. You can find it right in the middle of our website. Now talking about risk again. I think that the market just looks at this as the goalposts have been moved a little bit, and the markets don't really care a whole lot. I mean, it's like, okay, we'll see it. We'll believe it when we see it type of situation. However, I think there's a couple of developments that I think we should be looking at. First of all, if you guys missed Bitcoin, it just hit the 127% extension and 161% extension confluence. Pretty big resistance up here. I want to say it's also, big. You can also argue that it's trend line resistance as well. There's a lot of confluence up here, so be careful chasing it. And I want to also point out Ethereum hit the 127% extension and 618 retracement on a daily chart as well.
nice.
And it's very divergent relative strength. So if you're out chasing crypto higher, I mean, Bitcoin's breaking out, but a lot of these other altcoins are not. They're just, they're surging into resistance. So just be kind of careful with that as they're hitting those levels. Another thing is if you guys are following crude oil and you think that everything's just, rainbows and unicorns, just keep in mind that crude oil's still in a bear flag pattern, and we're tagging the upper end of the flag right now, which I'd be kind of careful chasing crude oil up here. It's still in a very bearish development. And so I think that, you just want to be very, very cautious trying to chase it up here. Yes, we are above the 200 DMA. There's that. But just be a little bit more careful. You mentioned silver. Silver looks very, very strong. Very, very big breakout in silver. But shit, I didn't mean to do that. But if you look at gold, gold's still struggling at the 618 retracement. I mean, this is the big level that I actually mentioned this in the week ahead video. If you guys want to know what one of the top trade setups of the week are, well, you can just go back over here for the last couple of weeks, and it's probing levels that we expected right at these prices. But look at FX market. The FX market is very much unfazed by all this. I'm not saying that the euro won't weaken or the dollar won't strengthen from here, but I think we have to be looking at what's going to happen tomorrow. With that being said, if you're in the chat room, like I was just reading the Goldman's inflation report, or what their analysis on what they expect out of CPI. If you want to find information like that and you're in the Forex Analytics chat room, just go over to where it's news and research, and you can actually pull up all of these research reports and anything that you want to find here. We all post whatever we see. So if you guys want to read through that, you can always do it in the news and research room. Always a lot of great reports and articles in there. For those of you that love to do research, which that should be everybody listening in right now. I wanted to ask what Ryan, what you think we should be expecting tomorrow. Goldman's looking for inflation tomorrow be somewhat benign, but then tariff inflation should be getting hotter in the months ahead from here. So do you have any thoughts going into tomorrow?
Yeah, well, the CPI is going to be whether Powell's justified or not in keeping rates on hold. That's basically what it is. If inflation moves higher as expected, then Powell says, "Yeah, told you so. This is why we're keeping rates on hold," which is a bit of a wonky situation because it's his mandate to get inflation down. So he'll get proved right, but the mandate's wrong. And if inflation's softer, well, Trump's going to hit the roof, isn't he? Because he's going to say inflation's coming down and stupid Powell's keeping rates on hold, and he should cut 500 basis points or something stupid. So he's a bit damned if he does, damned if he doesn't with this data, Powell.
Right.
And then it's going to obviously feed into connotations as to what's going to happen at the July meeting or the September meeting.
So, let's say Goldman's right, just based on their assumptions here that, month over month inflation comes in a little weaker than expected tomorrow. But, moving forward, it's the different story. So if it comes in a little bit weaker and, do you think this is the place that you want to pick up the euro? I mean, the risk is very clear here. I mean, below 1650, you guys should know this, especially if you're, Forex Analytics subscribers. Below 1640, 1650, it gets really bearish. But for right now, I mean, we're holding above this. Isn't this a great place to be long the euro right now?
Not this close to the CPI data and with this Trump announcement, no, because if he says we're going, hammer and nail against Russia, risk is going to take a knock and euro's probably going to drop 60, 70 pips, maybe more. But if we're going to get a ton of news this week about Russia, Ukraine, and it's not going to be particularly good, then if inflation's soft and the euro rallies, then you probably want to look at the other side and short that rally.
Well, that's not the answer I was looking for. So let me try somebody else. Kman, all right. So I'm
What is
just
the
joking.
answer you're looking for, Blake?
I'm not going to get that. That's not the droid I was looking for. Damn it,
Yeah.
Kman. All right. Well, hey, no, I'm joking. Ryan, great answer. But Kman, what are your thoughts going in to the inflation data tomorrow?
Not a lot, to be honest, because if it comes out as expected, if it comes out as expected, there's still so much geopolitical stuff going on. tariffs or whatever Trump announces for Ukraine or Russia sanctions. Well, if it stays to just sanctions, I don't think I don't think the market is going to trade any of it. But I mean, yeah, inflation sticky is as expected. So the surprise trade here would be if it comes out weaker than expected, and then markets will start to think about, oh, maybe we still have to wait for another month, but in the meantime, it's a bit weaker. So let's sell a few dollars, and then we're back at 117 and a half. And I still, I, it has to come out away from expectations to really materially move the needle. I am kind of disagreeing with Ryan on what Trump on the impact of Trump's announcement on Ukraine and Russia, because I think if he announces really something where the US is getting much deeper involved than what they are now, even if it's just like a bunch of defensive but also attack weapons, because that is a possibility, then it's actually being good for the euro because that's more support and less risk closer to home. Even if the response from Russia may be for a higher risk, but still, because US, sorry, was really threatening the EU to be left on their own to support Russia for a long while. So anything more support towards Ukraine, I think, should be good for the euro short term at least.
Well, whatever we're expecting today, it should be huge, huge, folks. And remember, like I said on the week ahead video, and this is before, he unleashed on more tariffs. It was with the political pressures that Donald Trump is facing. The risk is now on us. The risk is now on us, the rest of the world. Everybody in the wake of the Trump administration is at risk because as he tries to garner more support from his base, he's going to be doing crazier things. And so whatever you're thinking with Russia, whatever that is, just remember that it could actually end up being maybe even more aggressive as he tries to appease to his base. And if there's one thing that I know I've learned about Donald Trump in the 30 years of me following him, from his time as a real estate mogul in the 90s in New York and through my entire career, basically, is that he likes to have attention and he doesn't like disapproval. And right now his approval ratings are not that great, especially amongst his base. So the risk of him doing something more erratic and his behavior getting a little crazier is quite high, in my opinion. And so that's just going to create more volatility. So be on the lookout for today, because he says he's going to make some big announcements on Russia. Let's be at the ready. I don't think it makes sense to not be on guard, and just in case, guys, because things could get volatile. All right. So with that being said, Dale, I know you do have an interview, and I want to thank James for his patience. And Ryan Kman, thanks for getting us up to speed every day on the Flow Show. If you guys are not listening to the Flow Show every single day, you should be. You can find it right on our website under webinars. This is where you log in and you can listen. Well, you want to log in through here through this link, because this way you can actually talk to Ryan and Kman during the show. So if you want to be able to ask them questions directly, do it through our website through this link, because it gets you right into Zoom. Anyway, Dale, I hope you're enjoying your time in Southern California. Ryan Kman, thank you so much, and I'll pass it over to you.
All right. James Anderson, this is what you've been talking about for many years, and it's manifesting right on my screen. Welcome back, buddy. How are you?
Good. Thanks for having me back, Dale. Always good.
Yeah, so it's a very intense bull market. Gold silver ratio broke down when people had a chance to do some switching over, 105 in that area. It looks relentless. You think this is a time now where the real spec run happens in silver? I mean, it looks that way to me. What are you telling people as silver runs? You try and hold them back from getting in too deep in silver and still, making sure they own gold as well.
Yeah, it's always a tricky situation because you get people who want to start buying and they want to come in head first. And problem is a lot
Yeah,
of times they blow their entire load on one buy. It's kind of, just people with low financial acumen. That's kind of a problem.
yeah,
Um, you're talking about the gold silver ratio. Like when you look at the history of the gold silver ratio, generally when it does these gigantic, all-time high spikes, it's not that long after historically where you have it collapse back down. It's like anything with when something goes out of whack one way, it then starts to bleed the other way. And so this isn't really surprising. I think there was a
no,
lot of people this year who were talking about the spot gold silver ratio getting back down to the 70s. So
yeah,
it's
on
highly
its way.
likely. Yeah,
Yeah,
highly likely in the second half that occurs. So
okay,
but yeah, like hit the all button on that, and you'll see like on Trading View, when it comes to commodities, like I mean, it's pathetic. Like it probably will, this data would probably go back to 1998. So anyone out there, you're just working with blinders. You don't know what the actual history of the commodity markets are. So anyone who's really serious about trying to understand, commodity bull markets and bear markets and the size and the cycles they go through, you really have to have hundreds of years of data to really get a feel for the ebbs and flows of this stuff historically.
yeah. So, I mean, I think this is only the third time historically that we were over 100.
Yeah, yeah. The
So,
highest were two times. You had the Great Depression, which was, depending on the data that you find, was, and then COVID. That was also extremely high.
right,
And then
right
this,
there.
Trump tariff nonsense. That was a special blowout for anybody who was looking to get silver below 30. That was your shot.
That was your shot, and
Mhm.
it only gave you a day. So, are you getting more interest in, platinum had a huge run. People want to go to other white metals.
Yeah, we are getting some interest in platinum. It seems, people just kind of, and understandably, they think $3,300 gold sounds expensive. And yeah, it does nominally sound expensive. And so what you end up seeing is some thrifting for people with platinum because, in their living memory, they remember times where platinum was more expensive than gold. Uh,
Exactly.
and you can go back. I mean, Dale, you lived through times where platinum was multiples. In
Yeah,
the late 60s, it was multiples higher than gold,
right.
right? And so
Yeah,
now we are where gold is multiples higher than platinum. So this is why you need those really big commodity charts to kind of understand the wildness in terms of what commodity can get overpriced versus another on relative. You got to try and yank the fiat currency out of it because that can really distort things, right? I
you
mean,
have any charts that represent that you could show to
yeah,
us and
yeah, I
share?
can do that. Yeah, let
All
me.
right. So, I mean, that's a real look when you're looking at in terms of other currencies instead of just against the dollar too. So,
Yeah, let me
um,
share my screen here. I got to
I-
remember where that thing is.
but James has great charts, and
Yeah,
as you can tell, he believes if you're going to be good now, you have to look back then to
yeah,
have an understanding.
yeah. There's just something about a rhyme and time in financial history. Like if it's happened once, it can happen again in different
Yeah,
circumstances. It might not be an exact play out of how it went down, but there's a
yeah.
lot of things that repeat. And if you kind of study history financially, so like let's see here. We can start with like this is the former fiat currency, right? This is the gold. This is the gold versus the pound. This goes back to the late 1700s all the way to today, right? And
Wow.
so what you
Yeah.
see is kind of they lost their dominant reserve currency role after World
Right.
War One, essentially in the
Yeah.
30s. And you can just kind of see the price, percolating and then just doing stair steps, right? And then going sideways from 1980 until 2000, they sold off all their gold, like in Brown's Bottom, all these central banks. I mean, just the amount of gold that they sold in the 2000s out of Europe, just so silly at like all garbage spot prices.
200, 200.
Yeah. Yeah. I mean, like some of the lowest prices of gold, in the last, what is that,
20
25
years.
years?
Yeah.
Yeah. And so you're seeing this is a pound. This is like an indicator that you see, just showing you that reserve currency status and a fiat currency can last really long. And even though you went through wars and you had a debt to GDP that was 100 plus after World War II for the pound, it's still alive. It's still a fiat currency that's kicking, and it's still getting its ass handed to it by gold, just over time, right? I mean, so this is. Go ahead.
No, it's interesting. Is there any fiat? What fiat held up the best?
Okay, that's what I was going to do. I want to do a combination of a couple ones for you to understand. This is a good one.
You're way ahead of me. You're way ahead of me.
All right, so this is a little tricky because on the left-hand side is Indian silver, okay? And this is from 2005 to 2025, so just over 20 years. Okay, so Indian silver market is a big silver market. It's second only to the U.S. In terms of people who use it as an investment in a monetary metal and a store value. So on the left-hand side, you see the 2011 spike high, and there are two cups right here that I've drawn, two cups. And now we finally have a breakout. Silver, it's a leading indicator. You just kind of watch how Indian silver and Indian gold do in the rupee, and as time goes along, that occurs in your market as well. And so the dollar, it's occurring as we speak. Where silver is starting to threaten to break out of its cup and handle. But you can look on the right-hand side, like look at gold. It does those two lines, same time frames. Well, gold was kind of leading, right? I mean, it broke out nominally and it got everybody's attention and stuff. But here's laggard silver just putzing around and everybody's spitting on it. And, that was the time to be buying silver and knowing the long term that it would eventually start to catch up toward gold. So that's kind of the beta bet that you're made if you really went heavy long in silver in these kind of times where it's frustrating and it goes sideways.
Yeah, I was retail because retail really, wasn't, coming out of the woodwork for this latest move, because they were out of the woodwork maybe a year or two ago and just became discouraged by the sideways action. Is that true?
Yeah, so I probably have a really good chart to explain that phenomenon. And this is mostly like a phenomenon that you're mentioning, retail. What you see is a lot of times you go on like YouTube and people have their videos and they go to coin shops and they talk to all these different, brick and mortar dinosaur dealers. And so like, let me blow this thing up so you can see it. And so like, they'll talk about, we've been having a lot of selling. And of course you had a lot of selling. You know why? Because 2020 to 2023, there was an absolute gigantic premium on silver. And there was this original silver squeeze in Q1 2021 with a lot of hype. The spot price did okay, but then it went sideways for a long time. Those people who bought at these ridiculous premiums sat there and felt like losers. Now at a point where the premiums are getting them the ability to basically back out and break even, essentially. Yeah, of course, you're going to have a lot of people coming back and selling. So that's essentially what I think is happening. Like there was a long time a concern about 2011 buyers coming back and selling back when we eventually got back to 50. But dude, that it's 14 years ago. Like most of those people, either they put their head down, dollar cost average lower throughout the 2010s, got their cost basis.
They could have passed away in 14
totally
years.
They could have passed away. Their kids probably sold it off. I mean, what that happens more than you would think. The kid rebels, doesn't care about his father's stories about fiat currency. He could care less, just wants the fiat currency, so they just sell it too. So let me get back to the digression here. We did the Indian one, but this is the one, like when I look at silver, this is how I know, like, we're not even close to fair value. Like this on the left-hand side is Swiss gold, and this is the full fiat currency era. And Swiss franc was like the final one to lose its vestiges to gold. And when you have like the type of chaos that we're having in the markets right now, it's the safe haven currency that people flock to, that the people like to stick their capital in for the meantime until things kind of settle down. So the left-hand side, you see Swiss gold, the high in 1980, then finally in the 2000s it broke out and went to new all-time highs in 2011, but not much higher than the 1980 high. And now since 2020, essentially it's kind of broken out. And it's starting to do the stair-step climb that's typical in a bullion bull market. On the right-hand side is Swiss silver, which is the craziest chart of all, because you have essentially it's at 30 now Swiss francs per ounce, and it hasn't.
That's the average price for the last 30-40 years. about, right?
Yeah, I mean, I guess it's higher than the prices you see here in the 90s or whatever, but it's cheap. $30 an ounce Swiss francs. It's nothing nominally. You get gold at 2,600, and you have a situation where you're not even close to your 2011 nominal high, and you are 2.5 times away from your 1980 nominal spike high, right? And that's 1980 Swiss francs, a lot more strong than they are now. Right. So you have a situation here where it's like, yeah, I know 39 silver sounds, rich or something to someone who maybe doesn't understand. What you're seeing is your fiat currency purchasing power in bullion go to dust. That's essentially what's happening here. Right.
You have you have some upside targets, revisions in gold and silver.
Sure. I mean, what I'll do first is just simply show you like, I'll use asset classes because that, like I said, taking the dollar out of it is kind of the most important thing, right? Okay. So this is a 220-year chart of Dow silver ratio, right? Like you go to TradingView, you're not going to find stuff like this, right? So you can kind of see the ebbs and flows of, and if you know financial history, kind of different time frames where one asset class outperformed the other for long stretches. Okay, so what we had was this gigantic high in the first 2000 bubble, where we kind of went toward that in this last NASDAQ bubble, but it's rolling over now. You have a situation where it still costs 1,246 an ounce on this chart to get one share of the Dow. And 2011 low looks like it was around 300 or so, maybe 275. So just to get back to the 2011 low for silver, you have a situation where you have to multiply by 5 factor in terms of silver's buying power on the Dow, just to get back to 2011. Now, if you want to get really stupid, you can start talking about, what if we're having like a repeat of the 70s, which is a lot of people have been putting out points. It's right now, silver seems to be tracking best on an analog with the early 1970s bull, right?
I remember that.
Yeah, from the 72 to 75 bull. And then there was a little cyclical bear. And then it went absolutely nuts in the late 70s for the mania phase.
Yeah.
So that is essentially what we're talking about. You're talking about silver could do a push here where it starts going back toward the 2011. And then it maybe consolidates for a little longer, and everybody thinks, "Oh, that was the high. That was the silver bull market blow off," and they'll start scoffing at it again. And then something else will happen, and it'll go absolutely ape shit and go back down toward where it went in the 70s. So yeah.
All right, so your guesstimate, where will it be if it just pulls back to the 2011 low? Where do you think silver will be?
Oh, in the 2011 low, this is always a question of the Dow, right? I mean, 275 is roughly, let's say the number. Let's say that's the ballpark figure, or just say 300 for a round number. Where's the Dow when that's occurring? I'm sure they're going to keep the Dow propped up. I mean, passive investing, you got to keep people in those things. They got to keep it nominally looking good, right? Yeah. So, 30,000 Dow, 300, you're talking about a situation where it's nearing triple digits. That's possible. I would imagine you'd probably have the Dow higher, probably 40,000. I mean, Dale, these are crazy things to be talking about so far away still. Yeah. But this is just that's why I like to take the numbers out of it and just kind of do the asset class versus asset class, because it kind of gives you a feel for how nutty things can get either to the upside in terms of silver losing its purchasing power versus the Dow and versus the downside. I mean, you had a situation in 1980 where it spiked low to 20 ounces to get a share of the Dow. I mean, that's a tube of silver to get the share of the Dow. I mean, we could do that.
That was on the invasion of Afghanistan.
Correct. We can do this in the S&P 500 as well. Similar story. I mean, you have a situation here where it's roughly 30 to get a share of the S&P 500 in 2011 low, and it got down to near 1 to 1. Silver, the same price as the S&P 500 in 1980, or not 1 to 1. What is this number? 3 to 1? Yeah, 3 to 1 roughly. So, what's the S&P 500 right now? I mean, it's pretty gigantic, right?
Yeah.
The idea that 3 ounces of silver could afford it is, I know that sounds crazy. That's happened before, and it happened in many people's lifetimes, right? So you got to kind of, I don't know, you got to get in your brain and say, hey, brain, the way things were in recency bias, maybe not be how things are going to be in the future. So like later 2030s, you're talking about a situation where the country has unsecured, we have so much debt and we have so many unfunded liabilities. The typical way to write that off is just to devalue the currency very, very, very sharply. We have a situation where generations are going to be fighting over, various things in terms of the societal contract. So I think a lot of things are going to come about that are going to cause a situation where you're going to look at the stock market and say that's for scammers. just kind of like the stock market was thought about in the early 80s. It was spat upon. And that was the time generationally to be going headlong into the stock market. The early 1980s was the time to go bull in stocks.
So what do you think the con is? You know, they say that confidence is there until people discover what the con is in confidence. What's a con? The Fed?
Yeah, I think the con ultimately is the idea that you can keep all your wealth in paper assets owned by counterparties that when it comes to the liability, I mean, basically you have a government that can do whatever it wants. You have a bunch of corporations, that you've agreed, you have all these agreements with them, and if shit goes wrong, you go to a court of law and you're an unsecured creditor, you'll get in the back of the line. So like that's the problem. It's just the risks inherent in a lot of the asset classes that are in bubbles.
How about banks, James? Should people be concerned about their deposits in banks? Or
I don't think, as long as they stay in banks under the FDIC number, I believe it's 250,000. I just got to find a bank that doesn't trade big time in derivatives and opaque derivatives, where the balance sheet is somewhat sound, or they don't have commercial loans or commercial real estate, stuff like that, stuff that can go wrong, or they don't have the potential of having a run like SVB had. Yeah. I mean, even in that situation, someone that comes in and gobbles it up, and you're FDIC insured. It's just a transition technically from one website to another. All the data has to be transferred. Like, you don't want to have to go through that, right? So the one thing, just don't keep all your eggs in one basket. It's okay to have more than one bank account. You just don't want to go over that threshold. And, if you have a business, well, you're going to have someone, that you actually hire, like managing, full time almost, to keep the accounts in places where they're FDIC insured.
Okay, so with your historical background,
Mm-hmm.
how long did it take when we had a severe inflation for a recession to take hold, or for it to really slow down consumer spending, create layoffs? Or does just an inflationary environment, if it doesn't become hyperinflationary, just keep rolling along?
Yeah, I think that's their hope. Their hope is to be able to pull that off, is to basically have a situation where they can basically underpay you for your bonds, et cetera, and you probably end up getting captured in some of those when we get later on in the deleveraging cycle, where people basically have to be forced to buy bonds. At first, I would imagine that the Fed's Federal Reserve will buy a lot. Like, the Fed's balance sheet is going to probably balloon when things start hitting the fan again.
Do you have a vibe? You have a vibe when that might happen? I'm doing some reading, and it kind of seems like everything is okay through this year, and then we hit this rollover of debt, time bomb, huge wall, especially in commercial, where they have to refinance, from when they took out these loans. Is that what you're looking at for, to really shake things up and perhaps not have a market that could sell off 20% in a month and recover that and more in a month?
It's possible, because you could end up getting a situation where they basically start cutting rates again, and you get this mixed feeling amongst the bulls and stock market that, good times will be coming back soon. I mean, you have to have those people delusionally think that the stock market is going to keep, being a place where you go to get wealthy. It's it's had a really nice run post COVID, but things kind of change. But the problem is a lot of people, they stick around too long and they don't really change their thinking patterns.
Eventually, I know a lot of people are used to the letter V in recoveries, and even like in the bigger bear markets, like 2008, 2009, it may have taken months, but there's another letter besides a V bottom, and it's called L, where you just get the break, and then it's like it was in a car wreck, and it just moves sideways.
Right.
And never lets people get back to their BE or high equity point for quite some time. So
Yeah, I mean, I
ahead.
agree. You could have a situation like the 2000s where it kind of does this rolling stuff where it goes sideways and waves and it goes nowhere for a long time. But nominally it looks big. Nominally it looks big when you have a Dow at 40,000 or whatever. I mean, it looks like a place where, and it has some volatility, so it's exciting. But in real terms, gold is probably going to be doing accounting because we're obviously moving in a situation where gold is becoming numeraire extraordinaire, numero uno, right? It's passed in terms of the euro, what central banks have on their balance sheet, and as it gets bigger progressively in spot price, it's going to start crowding out the dollar.
Okay, so let's say we get to some of the big targets like 7,500 S&Ps, 8,000 S&Ps, and I could see a technical case for 7,500. Will gold outpace that rally? So from here, that would be what, about 20-25% left to the upside. So what you talked about, gold would need another 700, 800 just to keep pace with that, and more to continue the trend of outperforming
Yeah, so
the market.
the S&P and gold, if you look at that, for it to be 1-to-1, that is the historic norm. That's the median, right? Like that is the middle chart, literally. Okay. So for S&P and gold to be at 1 is that's normal. What we've been living in for the most of our lives, I was born in 1979. So the majority of my life is a situation where it's above 1, but that's recency bias. And recency bias can kick people in the nuts if they're not paying attention to what the other side looks like. And my contention is the other side's coming again. We had a brief time frame there, 2009, 2011, where it was 1 or below 1. And that was basically like an appetizer to where this gold bullion bull market probably goes. Because my contention is the 21st century has basically been just a huge long gold bull market. I mean, I know that the 2010s was pretty bad. 2011 to 2015 was a huge drawdown. 1900 to 1050 is a pretty big drawdown. Yeah. But in terms of what gold has been doing, it makes the 1970s look like a carnival act. It's that was just a Western world type of phenomenon, whereas this is a global event. So yeah, the concept of gold being 1-to-1 with the S&P 500 is the norm. So that wouldn't surprise me at all. We're at 1.88. For it to happen in this run, in this impulse move, it's possible. And that, that's probably the first impulse. And then the mania phase is the lower one. The mania phase probably occurs in the 2030s.
Okay, you think that's when they bring in the CBDC, because the dollar should be trashed by then? And do you understand the role of stable coins coming in here?
I think people are starting to realize that at least what the Federal Reserve is really trying, or what the administration wants to do, is they want to create this stable coin universe where they have these proxy stable coins all around the world and get people in emerging markets to own these stable coins. And that'll be a way for them to control, some amount of capital that otherwise would be in cash or in other banks, right? That they don't have control over. So this concept of having Tether or USDT or whatever stable coin you name, I mean they Tether especially is a walking, talking, breathing Ponzi. They've never done any audits. They have meetings with the U.S. Treasury and they're probably in on the act. It's a whole bunch of spending plates to keep the U.S. Treasury market stable, right? That's ultimately they'll do that, whatever it takes to do that. That has to happen. And they'll do that no matter what it takes. So Tether is one part of it, and the stable coin explosion that's they're going to try and pull off. I'm not sure if they'll be successful, but that's exactly what they're trying for.
Yeah, if people are really worried, it would start to become more concerned about the dollar with, say another 10% decline in the dollar, they might be open to anything.
Yeah, I mean, the dollar has been the worst start since the first half in 52 years, and that's exactly what the administration wanted. They wanted a lower dollar. That was part of their agenda. So this shouldn't be a surprise if anyone had been paying attention.
But that's now saying he wants a strong dollar. That was he did make that statement about a
It
week.
wouldn't surprise me if there was a bounce. I mean, you can't go down all, just straight line without any type of bounce at all.
Right.
Maybe we'll bounce back up to 100 Dixie. Who knows? But
Yeah.
I'm looking at I have a piece of paper here. I got to go to headquarters today and talk to the owner in like an interview. I have this look back paper from one of the original websites that they started, and it literally shows two charts, and it shows the Dixie at 74.47, and this is in May of 2011, and it's Memorial Day, roughly weekend.
Yeah.
So 74.47 Dixie. We got gold at 1,529 and silver then at 37.94. So the Dixie's now what, 96 and 7, and where's gold? Double. Where's silver? About the same, right? So this is like the Dixie is like a good thing for people to talk about who are traders short-term wise. I get it, and who are macro traders, totally makes sense. But it confuses the crap out of retail. Retail doesn't understand that it's basically a fiat versus fiat smokescreen. You're basically measuring majority euro, a little bit of yen, and a few other proxies versus the dollar. They're all fiat currencies, though.
A student of history and a guy who knows how the plumbing works, and not just the difference between a Krugerrand and an American Eagle. So check James out. You want to add to your physical, and also for sure follow him at James Henry and on X. Anywhere else you want people to go see your YouTube stuff?
Yeah, if you want, if you're on YouTube, like on week-to-week basis, I put out SD Bullion weekly update at the end of Friday, pretty late Friday evening. I'll put it out. It's generally like a 10 to 20 minute synopsis on I basically curate it essentially. Whatever news or data or information I find that week that is most pertinent in my eyes to the viewer, I'll curate it and I create a free video that people can watch. They can also get it on my Twitter handle. I'll publish it there as well. It's SD Bullion YouTube channel, and it comes out generally Friday evenings. If you're not somebody who sits on YouTube Friday night, Saturday morning is generally what a lot of people will watch that video. And so it tends to get 10, 20, 30,000 views, and it's respectful of your time. It's information dense. So you might have to watch it twice or press pause a bunch. Kind of let it drill through your head what I'm trying to get across. Maybe I don't speak so eloquently or I don't communicate it well enough, but ultimately I'm trying to do it in a condensed time frame, whereas a lot of the different people who do these channels, they drone on and on for hours, and it's a big time waste.
I don't have patience to watch those.
No.
So
It's unacceptable.
everyone's attention span has been diminished because we're bombarded
No doubt
all the time. Yeah.
No.
So what do you do on Friday nights if you don't watch YouTube nowadays, James?
I'm the one working. That's like the heaviest workload night. I'm usually there live when it gets published. I talk to the people in the chat. I engage with them. I mean, if you're not doing that, if you're not engaging with your viewership, then you're gonna lose in the end. You gotta know what they're thinking. So
what a difference 10, 20 years could make to what we do on Friday nights. Anyway, it was great talking to you, buddy. I hope things continue to shine for you and your clients, and you really give a great historical view of a lot of different things that people, probably don't see through, as you say, looking at everything through a fiat lens. So appreciate you bringing that knowledge to the community here, James. Thank you.
Thanks for having me on, Dale. Always a pleasure, bud. Safe travels.
All right, James Henry Anderson, everyone, follow him on X and check him out. And if you have questions about what you want to do in the physical market, James will be a great guy to talk to. So remember, most of all, don't just count your coins, your bars, your shares, count your blessings. And see everyone tomorrow for Turnaround Tuesday. Good hunting the rest of the day. Adios.